Time now for the 360 round. For that, let's bring in our panel to preview this week's earnings. Chris Wong, who's the Research Director at Runnymede Capital Management, and Dr. Ryan Stever, Chief Investment Officer at Intech. Thank you so much for joining us today. Chris, we'll start with you. I mean, we've seen two-thirds of the S&P 500, I suppose, already reporting, and more than 80% have beat earnings. So it's been a pretty good run. I think we're going to see from about a quarter of the S&P 500 this week. So it's going to be busy. What names are you going to be paying attention to the most?
Yeah, like you said, we're two-thirds of the way through earnings season. The S&P is on track for its third straight quarter of double-digit earnings growth. So it's been a really good earnings season so far. Obviously, the one that people are most excited about today is Palantir. All eyes are on the AI darling, and they are a darling for a good reason. They've seen revenue growth accelerate from 12% to 39% over the last 6 quarters. So you've seen this huge revenue acceleration because of their take-up on their AI products. They are really delivering on their promises, and customers are able to deploy and see results in short order. AIG expects that the AI underwriting is going to double their revenue growth over the next 5 years from 10% to 20%. So, I mean, that's a pretty staggering number. If they can continue to deliver those types of transformational revenue growth stories for their customers, they're just going to see adoption pick up. Obviously, the big risk is that they're trading at over 100 times sales. So they have to deliver on the revenue line and maybe prove that they can keep on growing at 40% or more going forward.
Yeah, some of the key phrases you use there, that they have to deliver and they have to prove it. I mean, the bar has just been set so high, particularly when you talk about tech. And I mean, I suppose that's why Dan Ives calls it the Messi of AI. And in 2 to 3 years, we could be looking at a $1 trillion market cap, and that it's an underestimated stock as far as Palantir is concerned. So let's get over to you, Ryan, because, I mean, as I mentioned, particularly on the CapEx side of the equation, I mean, you've had the Microsofts, as I said, setting the bar pretty high, and we've seen what that's meant for the Amazons and the AWSs of the world. So what are your thoughts as to what could sort of move the needle this week?
I think continued, change in how is the tech sector doing. I think the market has been trying to figure out for some time just, what is the ultimate size of the AI and AI providers? How big can their scale get? How much of the economy can they own is really the question. So I'm looking for that. I'm looking for, we learn about individual company performance from earnings, but we also learn about what's going on in the macroeconomy. So, with reportings and earnings like from onsemi, we're looking for, who is being affected by the tariffs and the supply chain issues. Where is the consumer at? Where is sentiment at? I think, coming up with some of the more consumer staples oriented earnings announcements like Walmart, who we've had in the past, Tyson Foods coming up, I think that we see that, sentiment is strong. Sentiment is very strong. And there is still some disposable income. We've seen that prior to the earnings cycle, we saw a lot of, names with poor cash flow position doing quite well. And so I think that's what we'll be looking for over the next, the next week's earnings cycle is there further confirmation that the AI industry is continuing to be adopted. It has further to play out in terms of the creative, destructive potential it has. And who are the headwinds? What are the headwinds that the individual companies are facing in the macro space?
Yeah, I want to ask Chris about this as well, because, Ryan sort of characterized the earnings season thus far, pretty well as far as what we've seen with regards to the trends. I mean, if you ask the banks or you ask some of the payment companies, they don't seem to be too worried about the consumer. But if you ask, some of your Chipotles and airlines of the world, they are. I mean, no doubt the tech companies are confirming that the AI narrative is very much intact. But, I mean, what are your takeaways as far as how you would really summarize the earnings picture so far, and what your takeaways are, and whether you have any concerns or whether this is confirming some positive trends?
Yeah, I think it's confirming positive trends right now. On Wednesday, we're going to get a lot of the consumer companies reporting. You're going to see McDonald's, Disney, Shopify, Airbnb. So we're going to get to see more of the picture of how is the consumer faring in this inflationary environment. I think one to watch is Shopify. Amazon just reported last Friday, and while there was concerns on their cloud business, they absolutely crushed numbers on the e-commerce side. So I'd be looking at Shopify just to see, are they seeing the same thing from their customers? I think they will be. We're going to see a continuation of resilient consumer spending, and with lower taxes ahead in 2026, the consumer is really going to be in a much better position in the months ahead. So I would stay bullish consumer spending, and it's going to be an interesting area to watch in 2026.
Yeah, and Ryan, just bringing it back to you to close out our discussion. I mean, you mentioned AI, and I touched on the CapEx. Some of the conversations we've been having here, particularly if you look at last year and the whole AI narrative and conversation, investors and I suppose Wall Street was getting credited with being pretty patient with this whole question around, right, show me proof of all this spend. And then, DeepSeek seemed to sort of pull the rug from under everything earlier this year. But now we're back to this sort of prevailing narrative that, you just sort of throw out eye-watering numbers and the street seems to cheer that. When do you think we get to a point when, investors start to question this, as far as monetization is concerned?
Well, that's really tough. I think when I think about, where we're at and where does the spend stop, we're in a situation, I think, where, you can have some real, I would call outsized returns. So if you look back to a period like 1999, 2000, you could have a situation where, I like to think of it this way, every single internet company could have been overvalued, but the internet as a whole was undervalued. And so I do think that we could be in a situation today which is somewhat similar. You have fairly high valuations of some of the, the big AI providers. But the fact is, AI is going to, change the world. And so I do think the result of that will be in a few years, there will be some very, very big winners and some very, very big, losers or companies who just muddle along. And so I think that race we're seeing is, hey, we have to be the one who's in the race to be the very big winner. I think that's what our investment process at Intech counts on, which is there are, yes, moderate moves, but you want to be in a position where you're going to catch those juggernaut moves. And so I think we're not quite there at where it's played out. I think as a whole, the CapEx going into AI is very rational at this point. And so you can't fall behind. It's an arms race at this point.
It is an arms race. That certainly has been what many have been focused on, who are going to be the winners and losers. Chris Wang and Dr. Ryan Stever, thank you so much for joining me here on Trading 360.